This is Andrew Stotz of Stotz Investment Research, and I'm going to look at Thai government bond rates, which rose to 3%, moving in step with Asia. Now, this chart shows three lines on it. The first line is the U.S., the blue line, and we know that the U.S. has seen its 10-year government bond rate fall from about 5% prior to the 2008 crisis down to almost, let's say, 1.5% to 2% over the last near decade. That's been driven by the Fed policy of keeping interest rates extremely low. Now, there's reasons why that could be a very destructive thing to do. And we've already visited the fact that when you keep interest rates super low, you cause the stock market to rise quite a bit, which is what's been happening in the US. Now, rates in Asia is the green line, and I took these rates by doing an average of the rates across Asia. It's not market cap weighted. In other words, it could be that the majority of bonds, let's say, are in the Chinese government bonds, therefore they should have a heavier weight. It was equally weighted across all of Asia. And we can see that the interest rates across Asia did fall with the US rate, but never got below about 4%. So the long-term 10-year government bond rate never got below about 4% in Asia on average. Now, Thailand is a little bit unique in this case because in about 2014, Thailand broke away from Asia and started coming down quite substantially until it touched the US rate level. Now we see that the Thai rate is starting to rise just like the US rate. Now, what you can see is that blue line of the US rate that started to rise all of a sudden started to fall again. Huh? What? Is that a head fake, as they say in basketball and other sports, when you fake something and you go the other direction? Well, Asia and Thailand both responded and have kept rising or have been flat in the case of Asia. But the US bond rates have started to come down. What does that mean? It's quite possible that nobody trusts the fact that the Fed will continue to raise rates because maybe the stock market will crash or the overall economy will do worse than than the Fed is claiming. And so there you have rates starting to come back down, saying the Fed's not going to be able to manage these rates down. Now, of course, it's a whole nother discussion whether the government should be involved with setting rates, but I'll save that for another day. Have a fantastic day and leave any comments in the section below.